Good morning, everybody. It's Brian Caprice from Keep Trading Simple, and this is our Tuesday trade talk. Quite an interesting day. It was yesterday. We had a little bit of a flat, and one of the things that we were worried about was any type of pound news. And I don't know if you guys saw it. We just got that pound news about 30 minutes ago about elections, and I'll go through that in 1 second. But with that being said, for the most part, overall, yesterday was pretty flat. We mentioned it yesterday. We didn't necessarily have a lot of news. We had the Brexit vote, which again came in as a rejection, which was kind of what was expected. I don't think it was anything that we didn't know. And then Draghi was speaking, but besides that, really not a whole lot else yesterday. And again, that's what happens when there's Mondays and no news, no catalyst. So again, there was definitely smaller time plays that we could have done. But for the most part, again, everything is preparing for the rest of the week. And again, today we have a little bit of news at 10 a.m. in the morning, and again, we'll roll through from there. So with that being said, let me jump in the background real quick so you guys know. If any of you guys are new, you don't know me, I'll be fast with this. I've been trading since about the 2000-2001 time period. I am considered a price action trader. I follow candlesticks, not candlestick patterns, but I'm looking how candles are formed, bodies and wicks. It's a little bit different of a system. I don't use indicators. So if you guys are looking at, you may see horizontal lines and boxes and wonder what the heck is all that stuff. Basically, that is areas of buyers and sellers, in my opinion. And those are areas that I'm looking for. I'm an if this then that trader. When price hits specific areas or does certain things is when I enter or exit my trades. And also everything is very much a kind of set mentality, right? Set it and forget it type trader is probably the best way to explain it. I'm also not a believer in sitting in front of the computer all day long. I believe in using things like alerts and indicators, like indicator alerts, basically saying that, hey, listen, price has breached this level. You can have it message your phone directly even, and then I'll come back and look at it. There's no point in sitting here just staring at a chart waiting for it to do things. It's like watching paint dry. I have worked in the advisory divisions of one of the big three banks. Very educational. I realized, you have a certain kind of mindset of what you think they know, and then when you get in there, you realize that they don't know what you think they know. So it was pretty interesting and pretty telling about what the overall markets and the opinions that just a retail trader would have about them. And then I was lucky enough that I joined up and I was traveling around teaching people how to trade. And I became very close friends with a few different market makers, guys that were on the insides that traded for some of the big brokerage houses. And hearing their side of the story about how the markets move and why they move and how to take money from retail traders really even took my trading to another level. And it's one of those things that I love giving back that information to everybody else. And again, that's why I do these presentations for Nadex. I'm primarily a currency and a Nadex trader. I do know how to trade stocks and options as well as futures, but my wife is a financial advisor, so I'm restricted from doing that. But Forex and Nadex are totally, those are completely allowed. So I absolutely love those two markets, and that's what we're going to be sharing with you guys today. All right. Now, with that said, let's go to the Nadex risk disclaimer for today because we are mentioning charts. Trading on Nadex involves a risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost at the end of the transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. And Nadex is a registered trademark of the IG group. All right, so with that being said, I'm not going to dive into it too big, but again, this was our top three for the week if you missed yesterday. Again, Fed funds rate on Wednesday, I think, is going to be a barn burner. There is supposed to be a rate cut, but I'm more interested in not necessarily seeing the rate cut, but I want to know what they are going to say in the statement. Is there going to be one more rate cut for this year, or is this going to be it? Are they going to be done? I want to see the language around when and if and what it's going to take for another rate cut, because if they give any information about, we're going to monitor it. If we see this, then we will, make adjustments. That's basically a telltale sign for what the president's going to do the next day, because he wants rates even lower to drive this market even higher. Okay, because that's what he's been gauging the basically his presidency off of how well it's doing is how well the stock market is doing. On Friday, we had non-farm payroll, obviously always a big one. Non-farm is, besides an interest rate cut, non-farm is the because those don't happen all the time. Non-farm is probably the most consistent large mover. You can have some really violent swings back and forth in the market, but not to be overshadowed by what's happening with Brexit right now. But again, that one happens at least on a predictable schedule. Okay, it's the first Friday of every single month. Today, 8:30 p.m. tonight, we have the Aussie CPI numbers. Now, CPI itself, It doesn't miss too often, but when it does miss, it does turn into a nice mover, particularly because the Australian market has most recently cut rates. Whenever you start talking about inflation, that's the first thing that pops up in people's minds. When you cut rates, they want to know about inflation. And again, rates is a way to kind of curb inflation. And again, that's kind of what matters. And then again, you see at the bottom, the warning Brexit news all week. Yesterday, we were waiting. We got Brexit news as far as the Parliament vote was rejected for an election. And then today, this morning, we just got some news. So let me bring this in real quick. Where is it? Oh, hold on. I know it's. Let me find it again here. There we go. And I will drag this in right here. So one of the big oppositions is not having the Labour Party in. This is the news that we just got this morning, that the Labour Party will back plans for a general election in December after the EU agreed to delay Brexit until January 31st. So we got a delay, which is kind of a pain. It's kind of like, it's taking a little bit too long. It's just figure out something. Well, all of a sudden, bam, you have a big party that's involved now. Again, Labour Party's got some, some weight to throw around. So this is actually a good thing for moving Brexit forward. I think we will have a little bit of a delay in kind of Brexit news now because it's just going to be all election based. But all the people that were kind of sitting there on their hands and rejecting it and trying to get May out and basically trying to fight for their party, they are now at risk. Okay. Basically, the reason why they wanted this to go to an election was to basically remove everybody that would be considered an obstructionist, that was not on board, that just kept, basically saying no, 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 no. Well, now this is kind of where it's going, right? You put your feet, you stick your head in the sand. Now they're going to have an election, and you're going to get voted out. And again, people, originally they didn't really necessarily want to go against, the prime minister, but hey, now they're like, hey, listen, we're on board. Okay, so people are joining forces and they're getting involved. And again, the one related story to this one is that Brexit. This is what we saw about 9 hours ago, right? Late last night, that they agreed to give it to Johnson, kind of the push. All right, so now they've gotten the push, the delay, and also again they've gotten now the kind of the checkbox to, hey, let's do it. Let's do a vote. Let's throw every single one of these people in here that have decided that they were just going to vote no to everything just because it's not their party or their affiliation. Now they're at risk to all getting voted out. All right, so definitely pretty exciting. Maybe Brexit will finally, again, think about it. If you are one of these people that, imagine being a UK business owner and being literally stuck in for like 2-3 years now inside of this Brexit situation, trying to figure things out and coming close to a deadline. Imagine being a citizen in all this. It's just, they voted for it and it's been forever, for this to kind of go through. So it's finally coming down to the point now where, and there you go right there, the Brexit Parliament vote pass. Okay. Yeah, it's finally coming to fruition for them. So they're definitely pretty excited. Now, how do the markets react? Well, if you guys look at the top, you guys can see it again. We'll see it in charts. But if you look at the pound yen, 58 pips in the last 24 hours, and you can see almost all of that is in the last 60 minutes. Okay, so again, a lot of movement. Same thing with the pound dollar. You also see that the euro pound is down, and again, most of that is all coming from here. So again, the markets are happy about this. This is a good thing, right? It's good for the for London, for the UK. Get out, finally break free, and then you can start rebuilding. And again, across the board, no one else is really taking much note to it, which is expected. Euro dollar is down a little bit as well, as you see a little bit of euro weakness, but that euro weakness is really coming from just this news. And you can see, the 60, 15, and 5, it's actually up a little bit, right? It's a little bit up. Okay, so that's, again, we were in a full negative patterns. One of the interesting things in the presentation last night that I was going over with my students was last week, we kept talking about how the pound and the euro were both very, very high up on kind of what we'd call the curve, right? We were up near selling areas. And it's funny because we were talking about, okay, listen, it doesn't matter which pair you're kind of matching them against, the euro or the pound, everything was high. They're all looking like they want to turn and flip. And then last night we looked at it, euro was basically right across the board in kind of its trending states as well as all the pound. Now this will obviously debunk it a little bit, but this is going to be kind of a short-lived kind of burst in my opinion. Because again, like I said, we're going to have elections, but those elections don't happen until December, and this is October. So we know that they're coming. Not quite there yet, right? All right, so with that being said, let me pull this back out so we can get this across. All right, so let's go right across. So Looking at where we were from this time yesterday to where we are right now, we talked about there was a selling zone right above in the Aussie yen. Okay, now if you look here and you can look at the time at the bottom, we're still part of that 4 o'clock candle. Okay, if we go back, you can see that the last 4 o'clock candle was right here. Okay, what we mentioned is, listen, we need price to get up. We need to get to a good level. We want to make sure that we don't sell it until it gets to a good level, and that's what we had. Price came all the way up. We tagged this little daily zone right here, and now we're seeing price start to turn and flip. So we have gotten a push back from it. It's settled out more or less at this where we had some basing before, right? We had this nice little pop from this yesterday morning, kind of came across, found some buyers, and then pushed higher, and again came back. Now we will see where we end today. And again, if you guys don't know, a lot of this had to do with the U.S. stock market yesterday. A lot of this was yen based. Today, I think we could have, maybe a little bit further, but again, we're bouncing off a daily selling zone. So for me, I'm a bit more short biased today. I'm waiting for some type of a signal low on the lower time frames here on the 30-minute. Again, I think we will have to have U.S. traders probably step in on this one, but see if we can start getting a push and flip to the downside. If we do start making a push back up to the high, we did go quite high into this range. Right now, we are still sitting, if this is the top of the zone, we still have about that much room left to go in this one. Before we were above it. And again, we're looking really for some type of a confirmation entry, some type of a clearing. And again, there are multiple ways that you can do this. I have my ways. You may have yours. I mean, you could even use something as simple as some type of a moving average crossover if you like. I don't use those, but I know a lot of people are comfortable with those. You could use that if you really wanted to. But we're looking for some type of a confirmation entry to the downside on this one that we're going to go short. Now, looking at the Aussie dollar, okay. Similar picture, but not quite as large, right? This is the one we talked about that it wasn't as clean. We were definitely back up in a zone here, and we went a little bit higher. Not, like I said, a lot of room here, right? This was that daily zone we were talking about, and we talked about this little zone up top is what we bounced off of last time. Where we are now, looking at it on the 4 hour, we can see there's a level of basing right in here. I'll move this, I'll move this over so you guys can see it a little bit better. So that's the zone that we're in. So we are still technically in. All right, let me make this red just so it doesn't, completely confuse people, right? So we are kind of sitting in that area. Like I said, with the U.S. market not open yet, it'll be interesting to see what the consumer confidence number is able to do to this, and here's why. So the consumer confidence number today is forecast to be 128.2. The previous number was 125.1, okay? Now, if consumer confidence, if they shot a little bit too high, that would be bad, right? If consumer confidence is low, that's where you expect the economy to go back down again. Why I find this number today interesting is because it's at 10 o'clock. 10 and 10:30 are the most common reversal times during the morning. So what this could give us is, before this, we could have the market moving in one direction. If it's moving up and this number is bad, it could turn and move the entire market down for the day, and vice versa, okay? Obviously, yesterday, the big driver and why everything was moving is because Trump said that, we are ahead of schedule, right? In our China talks, we are ahead of schedule, which, again, for me, I thought that was very interesting because, what schedule is he following? If this is truly a trade war and they're going back and forth and it's been as bad at times as they say, what schedule are we following? I've said from the very beginning that I don't necessarily believe this trade war has to be real. I believe it's just a way to manipulate the overall stock market. And as we get closer and closer to elections, I said that the trade war would be completely over. And now we're ahead of schedule. So I'm not sure what schedule he's on, and he's never published the schedule of where we're supposed to be by certain times, but we're ahead of schedule. But again, that's what drove the market. So unless we have news like that today and consumer confidence is bad, I can see this turning, flipping, which again would be dollar, bad for the dollar. And again, that's what could send this, back to the downside from the sell area. So just be cautious of that. I'm not too worried about any type of breakout out the top side, just because if we do go higher, again, it's going to run into this little kind of this tan zone right here where we saw this last bit of basing before this last pop, and it's what stopped it last time, as well as right above in these two black lines. We have a higher level, kind of a way back when daily sell zone. So there's a lot kind of stacking above this one. All right. Looking at euro pound. Now, euro pound, you're going to obviously see the movement we just saw. There you go. And again, it happened about an hour ago. You guys can see what happened. This thing just went right through the floor, right? Boom, right here. One candle, quite large. Like I said, in this 130-minute kind of news release, it's about 30 pip movement. Looking at the ATR during this time frame, what's normal? You can see even with the spike, it's only supposed to be 9 pips. Man, if we take the the average in here, somewhere in here, you're looking between 7 and 9 pips per 30 minutes on this pair. This one moved 30 pips in 30 minutes. So you can see quite a large spike down. Okay, it is something that's a little bit bigger. You can actually even see the blip on the daily. You can see that this one was really starting to consolidate down again, really getting a lot of sideways movement. And again, where were we? We were up in an area of basing. Okay, actually I should have left this up here. So price had rallied up. It's almost like the market knew, right? I always joke with my guys. I was like, look at that. Right before this news release, it just happened to rally right back up into the zone, and then boom, collapsed right back down again. So interesting how that works out. For this pair today, I think again with the European markets closing in just an hour or two, or a few hours from now, I guess it's almost 8. So yeah, about 3 hours. I don't know that this will continue to move down here. I think what it'll do is it'll find some place to rest and kind of start basing sideways. Just because, again, like I said, with those markets closed, there's no real reason for those two to move back and forth. Once we're not getting any news or any additional catalyst, I see this one starting to slow down again. This pair has been so hinged on everything Brexit. I mean, all these moves, all these wicks back and forth, and these candles bouncing back and forth. These were all news releases about Brexit, and again, now there's just type of, again, now it's going to be, basically them puffing their feathers and talking about, okay, this is what's going to happen at the election, and people starting to make some comments. But as far as truly what's going to happen for Brexit, I don't think much is going to happen, because now the goal is going to be to vote out all the obstructionists and get whatever deal they feel like putting in. Okay, so I will say this. It is possible that we will get a Brexit deal from now to the elections, just so one, people don't lose their seats, and two, they don't get, they don't get a deal that is absolutely so horrible that they can't live with. So this could be a month of compromise in the UK, if you get what I'm saying. All right. So just be cautious about this one. Like I said, we are kind of at a lower level of basing on the 4 hour. And again, it's had some issues. You guys can see there's definitely some buying areas below where we are if we can go too much lower. All right. Now looking at your yen. Now, your yen, you're seeing kind of the opposite kind of pop in here, right? Again, this is not against the pound now. This is basically against itself, right? And what is it doing? We got a nice little pop, and it went up to the same level of basing, right? Now, here was kind of the basing level up top. You can see it bounced off of that. Again, Brexit is also good for the European Union. Like I said, it would be good for them to be out. There's a lot of uncertainty in trade and things like that, and they just don't know. Again, having any type of certainty in business is always a good thing. Even if it's bad business, having certainty is good, because then you can make the adjustments that you need. Okay, so this was good. It is kind of flipping back up again. I actually do see a little bit more. Again, a lot of this is also going to depend on the consumer confidence number and the dollar today. But I do also see this one, the euro, actually getting a little bit more weak. Like I said, it was high. Everything was talking about how it was high on the curve. We were looking for some type of a flip. As you can see here, this one, it literally rallied back up into this kind of this level of basing. Again, the last time we were here, a wick went up to grab some more orders before it kind of came right back down again. But again, you're going to have to think about this one as kind of a rock and a hard place type situation. I mean, I'll just continue this across, even though the wicks are a little bit there. And again, what I'm trying to do is I'm trying to encapsulate this sideways move with it. Okay, so that's kind of where we're going. And again, if we extend this out the bottom side, it's kind of the same situation. It's kind of like a rock and a hard place. And you can see, we started at this level, came back up, base, down, up, down, down, up, looking for this zone next. Okay, so I do expect price to come back down here into the 120.40-ish range, about 30 pips from where we are right now. Okay, is it the best actionable trade? Does the risk to reward ratio necessarily, does it make sense? I probably won't take that down to that area, but I'll be looking for some type of a reversal pattern if we can get back down here. And again, this is where we ended on Friday, this little candle right here. All right, looking at euro dollar. Now again, euro dollar will be a mover today with CPI, or with consumer confidence. You can see again, this one has the same pop up, right? That same pop is because again, Brexit is also good for the European Union. People are happy about that. Okay, it went sideways. And again, if I stretch this out, you guys can see it a little bit better. Again, what did it do? It popped straight back to the start of this last move, right? To the part of the same rally. Now, again, I was not trading at 3 o'clock this morning, but had you been trading at 3 o'clock this morning, you would have been able to have this marked off. And again, starting to play this retracement. This move is also pretty nice. We're talking about, again, 18 pips in this, and the ATR on this one is also not very high, right? The ATR here, you're talking about 6 pips. Right, so it moved 3 times in that time frame, and it's turning and flipping back down again. So Looking at the 4-hour, I have some zones marked off, and again, this is marked off the daily of where potential flips were. Was really looking for this to come up, and I was hoping overnight we would get this to drive higher. I really wanted to get a short out of this upper zone, and it didn't. It literally grazed right off the bottom, and that came off a daily zone, right, and started to push back to the downside. So I do see more weakness in this pair. Like I said, I think we will get some, we'll get some dollar strength hopefully today. If this consumer confidence number is good, we could get that. And just FYI, again, we talked about this bottom area yesterday. Again, this was a zone that we talked about. It was very easy to see. If I extend this across, and I can't change the top line, you guys can see it there. You guys can see exactly what this ran into before it popped up again. So it's almost like the market knew. And again, that's a zone that it's been holding, right? And again, it did exactly what it was supposed to do. It came down, it ran into the level of buyers, it popped up to the last level of basing where there was the last bit of movement, and that's right there. Okay, so that was a completed target on that one, based off of news. All right, looking at pound yen. Again, pound yen is up 59 pips in the last 24 hours based off of where we were yesterday. You guys can see this one pretty clean, right? Price came back down again. Where was it sitting before that? Well, we had this level of basing right here, okay? We had driven down from 3 o'clock in the morning, right? Here's your 3 o'clock candle. Again, what was it? It was bearish all morning, and then they made the release. And what was it in? In the area of basing. It popped right back up and went right to the start of where the move actually occurred. So again, another textbook piece on this one. You can see as well here, this one candle was about 70 pips tall. The ATR, looking at this low time frame, is, and again, if I'll take an average here in the middle, is about 17. So you can see, even if I rounded up to 20, it was still over 3 times that bit of movement, and that just shows you the power of something like Brexit. Would you have been able to play this one off of, catching it? Maybe, maybe not. But again, it wasn't in a level of basing down here that we knew, obviously we could have some, movement off of. So nice little pop. I do expect this one to come back down again today. Like I said, yes, there's going to be a vote, but we still don't know any more than that. Things tend to revert back to where they move, especially when it's this big of a bit of movement. So we'll see. I would expect that we're going to rally back down, or kind of drop back down again. Not have a continuation of this rally, coming back into the 139.50 area, about 50 pips from where we are right now. Looking at the pound dollar. All right, pound dollar, same little pop. Okay, same idea, right? Didn't quite get back up. I was looking for this to go just a little bit higher before we kind of had a retrace. Was hoping to get a little bit more legs under it. We didn't. Looking at this one on the daily, though, again, you guys can see we're, again, we've ran off this large level of supply. We've had a big push. We've had, a failure to go higher back in there, another push down on the red, and again, we're seeing this already coming up, and it's already starting to run into gas on. It's going to retrace to the top side. So still looking for this one in somewhat of a bearish sense, just because we were where we are on a technical basis. Again, with a lack of Brexit news for the rest of the week, if this is if at this point, if they're going to go in there and go to the war rooms and figure out how to get everybody voted out, I don't think there'll be much more. I mean, at this point, the extension for the euro has been put in. The Labour Party leader has said, "Yep, we'll back the a general election." So that's kind of all we're waiting for. Besides that, I don't know that we'll have too much, unless all the people that were, again, the obstructionists, if they say, "Hey, listen, let's make a deal right now," because I don't want to, I don't want to get voted out. That's a little bit different situation. Again, we're not going to be able to predict that. But just looking at on a technical basis, not talking about Brexit, again, I like this one to the downside, with eventual targets down here to 122. Okay, we'll see what kind of deal I can put together. Looking at dollar Swiss. Okay, dollar Swiss, kind of holding a sideways pattern. Again, we kind of came back up again. We did get a bit yesterday of a drop down. And then again, we did have some dollar strength on this one. So again, this will also be a consumer confidence-based number. Like I said, we're stuck between the selling area and kind of this buying piece, and it's just been kind of staying in a small range. It needs somewhat of a catalyst. We don't have it right now. What's interesting though on the daily is you guys can see the pullback, kind of the selling off of this supply zone. And the green push back up again is not as far. So if we do get dollar weakness today, again, what that's going to do is going to drive us lower back on this curve. It's going to drive us farther away from this zone. Again, signaling that could obviously be a reversal for us. Okay. And like I said, there was your selling. There was kind of the profit target at the bottom. We talked about that. I don't know if I talked about this last night or yesterday, but again, it's only about 28 pips. It was not a huge move. Again, you got your entry here about 4:30 this morning, and you can see right now at 8, we're down here at 99.50. the overall kind of target we were looking for was 99.35 to the downside. So just a smaller trade here. Not the biggest mover, but that's what the charts are giving us. An overall kind of target on this one that would be 90.50 down here. Looking at dollar CAD, so dollar CAD didn't really move too much. It's down 13 over the last 24 hours. Okay, one of the big things that we're looking for in this one is we were down here, and again, a lot of lines on this one, but there's a lot of different things with alerts that I have kind of marked off here in different zones, particularly in this kind of stepping pattern to the downside. But we've pushed down just a little bit farther. You can see yesterday we really didn't do much, right, over these candles here. We were still skirting right above this buying zone. Well, we finally have touched it, right? We finally have entered this demand area. Now we got to see what we're going to do, okay? Consumer confidence number will move this pair a bit, but we'll kind of see how far it's able to go, right? It only made a very small pierce. It would be great if this was a number that really made the dollar weak. I'd love for this to pierce very deeply into the zone, particularly with, again, the timing right now. If we could drop down and this is just solid red candles and we really get a nice concerted kind of push, ending up with, in the next 3 hours, ending up with something like this, definitely be, very, very into this trade, okay, for some type of a continuation. See at that point if we can crack below 130. I think that'd be a pretty interesting trade setup. But right now we're in an area of buyers. Again, nice. It's the 730 push has been really nice. It's been a good push, but we are now officially inside of the demand zone. Okay, what we would do is look on lower time frames, particularly with news. Like I said, we've driven down here. If it holds here for the next 2 hours, what that would do is that would take us up to consumer confidence number inside of a demand zone. Okay, there may be options for you to take a potentially out of the money position in this one, take something small so the risk is tinier. And again, obviously with Nadex, there's a couple, again, the 2 hour binaries are absolutely great, for that consumer confidence number. And this may be a way that you can play one of these shorter term duration pairs or shorter term duration options based off of where we are right now, okay? Now, again, make sure that matches your risk profile. All right, looking at dollar yen. Come on, load. There we go. All right, so dollar yen, okay? You guys can see for the most part, right, yesterday, okay, we had this nice little pop from 8 o'clock in the morning, literally right after we got off. I said, okay, I wouldn't be surprised if we get a little bit of a bounce here. We want it to go a bit higher. It did. It popped up at 8:30, pop again at 9:30, and then pop again at 11:30, and then kind of came in flatline for the most part for the day. What did it do at late last night at about 9 o'clock? It went up and actually touched that zone. So this is actually where our trigger mark was. We were looking for this, the trigger. It kind of, and actually I moved this last night down a little bit. I would have liked if we went just a bit higher. I would have, it was so close yet so far, right? So again, not quite at the zone. This is our trigger mark. It's kind of pulled back at that point. It did run into a level basing, very easy to see, right? It's grabbing more orders right here. And again, it's probably waiting for the consumer confidence number. Now, again, I expect, again, there will be some type of reversal today. I want to see if we can go up. I'm definitely looking for shorts if I can get up top. But at this point, we're starting to get a little bit farther away from it. You're talking about 29 pips with a nice miss on that consumer confidence number. It definitely could spike up into that zone. Consumer confidence, when we have a miss, can I think the average is about 31. It's 29 to 31 pips is what the average miss will make us move. So we are within striking range of being able to go up into that kind of, again, what one of my students calls the guitar strings. If we can get up in the guitar strings, especially in a spike number, definitely look for a bit of a reversal today is what I'm thinking. All right. With that being said, all right, so that's the last analysis for today. Looking further into the week, again, because this is our last one of the week, I just want to drag Forex Factory back in again and kind of give you guys things that I'd be watching out for. Let me drop this back down to just the high news releases for the week. So with that being said, Wednesday, okay, there's some Canadian news that I definitely think you should pay attention to. We just talked about how the Canadian dollar was kind of down in that buying area. We finally have pierced that lower buying area. Well, guess what could mess that up, right? By the dollar CAD going up, that is CAD weakness, okay? We could get CAD weakness on Wednesday morning, tomorrow at 10 a.m. when they release this. Now, they're not expecting any type of rate cut, but what they say in the bank statement, talking about we're going to monitor this, that we know the economy is slowing, we'll see. That could be very bad for the Canadian currency, which again, that could be the catapult to launch this forward. So it could be kind of a two-pronged attack. It could be, consumer confidence today, as well as, a weakening, Canadian government, that could be interesting to kind of set that position higher. Also tomorrow, be careful because FOMC, again, with this rate cut in here, this will have some effect. The 1.75, just be wary. It is already factored into the markets. You will always see some type of movement, even though it was expected. But again, it's kind of what they are saying about the rest of the statements that is going to be important. Other things to look out for, again, obviously on Friday is going to be non-farm payroll. Okay, just a word of warning as well. Be cautious with non-farm. Last time I talked about getting this drop, getting that 3.5, and I was able to predict it, although it did drop by 2. So things that I'd watch out for on this one, right? The forecast was here, right? It was forecasted, there was its previous, and it dropped by 0.2. They're saying it's going to be 3.6. Don't be necessarily surprised if it does come in as a 3.6 and then they change this one, okay? Sometimes they will make adjustments to the previous. Don't be surprised if the adjustment is what the actual movement is based off of, because it wasn't as good as we actually thought it was. Okay, so that's just one kind of word of warning, some type of caution going into Friday, because again, that 0.2 drop was big, although a couple different people. The Australian market did a 0.2, Canadian government did a 0.2, so a bunch of people did that 0.2, but sometimes they get a little bit overzealous and the forecast is a bit too high, and then they need to readjust. Okay, so just watch out for that one. Those are the big things. Also, as well, your Canadian GDP is right here, okay, on Thursday. So on Wednesday, on that same dollar CAD trade, you have the BOC monetary policy, the rate, and the overnight, and then you have GDP. And again, the GDP is expected to be higher, but if it's not, again, that's going to set that dollar Canadian currency pair straight up in the air. All right, so that's what we're watching out for. All right, so with that being said, guys, that is going to be in the charts. Next week, you guys should be getting an email. We're going to mix things up and take these sessions to nighttime, okay, and see how see if we're able to give you guys a little bit more content in the nighttime hours where we're not rushed beforehand. But if you have any questions for anything I have to say, again, emailing me, support keeptradingsimple.com is probably the easiest. Nightly chart schools are going to be at 9 p.m. Again, next week at 9 p.m., we're going to do a special presentation for the weekly setups. Again, you will get information and emails about that, as well as you can check us out on Instagram. So thank you guys so much for joining today. I really appreciate it. And if for any of you guys that are going to be around, make sure you attend that parabolic retracement webinar this evening at 9 p.m. Take care, guys, and have a good week.